Saudi, the UAE, India and the US expected to announce a major infrastructure deal, and funding for MENA startups falls 73%. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Saudi, the UAE, India and the US will reportedly announce a major joint infrastructure deal tomorrow at the G20 meetings. It's for a network of railways that will connect Gulf and other Arab countries. It will also connect to India through shipping lanes from regional ports. The project is one of the key initiatives the U.S. is pushing in the Middle East as China's regional influence grows through its Belt and Road vision. Meanwhile, Saudi and India will host an investment forum during the visit of Crown Prince Mohammed bin Salman. The event will take place after the G20 meetings and will focus on energy, chemicals, manufacturing and tech projects. India is Saudi's second largest customer for crude exports after China. The Saudi Ministry of Investment says the investment forum is part of efforts to diversify the economy away from oil. Saudi has recently held similar events in Italy, Japan, Brazil and in France. Funding for MENA startups dropped by 73% in August this year compared to August 2022, coming in at $101 million, according to WAMDA and Digital Digest. It says August witnessed 26 funding deals across the region. Saudi startups received the most funding, raising $54 million across 8 deals. The UAE came second with $44 million spread over 9 deals. Startups in the logistics sector raised the most funds with $36 million, followed by travel tech, health tech and Web3. The UAE debt capital market is expected to exceed $300 billion by 2030, according to Fitch. The UAE's debt capital market is the largest in the GCC, crossing $250 billion in this year's first half. Fitch says it was driven by issuers funding diversification goals and government initiatives to develop the market, implement the dirham monetary framework, and build the domestic yield curve. The UAE recently launched dirham-denominated treasury bonds and a dirham-denominated Islamic T-Sukuk program. High U.S. interest rates are doing their job in the fight against inflation, but more hikes may be needed, according to 3 Fed presidents who commented last night. Those comments solidified expectations that the U.S. Central Bank intends to hold rates steady later this month amid growing signs of weaker labor market conditions. The Fed has raised its benchmark lending rate 11 times over the past 18 months to a level not seen for 22 years. GCC countries have largely mirrored those rate hikes. Apple shares fell sharply for a second straight session overnight after reports that China is banning the use of iPhones in government-backed agencies and state companies. Shares have lost over 6% over the past 2 sessions. The move comes amid intensifying tensions between Beijing and Washington. The release of a Huawei smartphone using a made-in-China processor is being hailed as a triumph in the wake of these U.S. sanctions. China makes up around 20% of Apple's business. And Artemis, the investment arm of the French billionaire Pinault family, is acquiring a majority stake in U.S. talent giant Creative Arts Agency. Artemis will purchase the stake from global investment heavyweight TPG. Terms were not disclosed in the deal, but U.S. media say it's valued at around $7 billion. Artemis owns the Kering Luxury Group. CAA represents A-list actors like Brad Pitt and Jennifer Aniston and Salma Hayek, who is married to Artemis CEO François-Henri Pinault. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.